Good afternoon. We're here for another segment of 15-Minute Financial. My name is Tiffany Brinkley. I am a Seattle-based financial professional and financial literacy educator. I know everyone that's watching me today is stuck at home due to this COVID-19 issue, and I just want to let you know that there are many of us out here in the community as essential workers that are wanting to make sure that you guys have the services available to you so that way your lives can continue to move forward. Specifically in the financial realm, there are so many things going on right now. The markets are being pretty interesting, I should say, in the moment. People are getting sick left and right, not knowing what's going to be going on with their health, family members passing away, and all kinds of crazy things, people losing jobs or whatnot. So with that, I want to move forward and sharing with you guys some things you should be thinking about, perhaps some strategies you can be implementing for yourselves and your families to put yourselves in a better financial position. With that, let's get going. All right, my disclaimer. This segment is educational in nature, designed to share and encourage dialogue around financial concepts, news, strategies, and tips often disseminated by various media outlets or taught by industry educators. My goal is to provide means to uplift families, professionals, and business owners who are seeking to protect their family, health, and wealth. But really, it's up to you to be responsible for your own financial enlightenment, right? Do your own research. Stay positive and keep an open mind. This presentation should not be construed as offering investment, tax, or legal advice. You want to consult with a trusted licensed financial professional for proper guidance with your personal circumstances. All right, you guys really need to understand this. Albert Einstein was a bright man, right? Compounding interest, and I talked a little bit about that in the last segment. He really believed it to be the eighth wonder of the world because he who understands it earns it. He who doesn't pays it. And when you really think about that rule of 72, again, remember 72 remains constant, and any interest rate that you earn, wherever your money is at, that will help you determine how long it takes for that money to compound and double, right? And so if you understand that, it'll help you really allocate your assets appropriately, putting them into the right structures that'll help you get wherever you're trying to go down the road. Okay, so yeah, we grew up thinking that money grows on trees, right? Especially in my generation. And people always make fun of my generation because they think that we always believe everyone owes us everything, right? I am not a millennial, but I am pretty much bumped up next to them. And so a lot of the same tendencies apply. But you guys have to know that there are many different financial strategies available to you out there, okay? If you talk to any standard financial professional, if they're not giving you all of your options, that's a problem. Whether or not they believe in any particular option or not, you should be able to have the opportunity to be made aware that it exists, right? And be shown your options. So that being said, what's available to you, okay? Are you guys familiar with individual retirement accounts or Roth accounts? Those are just accounts that you're able to open up and own yourself so that way you can start planning for your retirement. There are restrictions on these accounts. I am not licensed to set them up personally. My agency that I'm building, other people in my agency can do them, but they're definitely one way that you can start putting away. Specifically for the Roth, it does not generate any taxes, so that's an opportunity. Now with annuities, if you are somebody who's wanting to have a guaranteed retirement or other savings type plan available, annuities can be great. Some people that have been around for quite some time are not really feeling them. I have to be honest and say the old annuities weren't that great, okay? Because if you understood that you were effectively signing a contract, because it is a contract with an insurance company, that basically says that the insurance company is holding a pot of money for you that they will then give back to you in some kind of structured payment, okay? Well, in the old days, if you passed away before that structured payment was completely paid out, well, the insurance company kept that money. But now, the way that they're structured, the family or other beneficiary that the owner designates will get the remainder of that money. It's a great way to make sure that you don't outlive your retirement. And if you know of people that have been sued for their assets, it's one way in some cases that you can make sure that you insulate your assets from, just people that are out there just trying to get you, right? Mutual funds, that's just another way that you can buy pooled stock. Life insurance strategies, one of my favorite things to talk about because I definitely believe wholeheartedly in life insurance. If you understand that it's about the structure, how it's designed for you by your financial professional, and how you pay into it, which really creates the value, right? But life insurance, the operative word is life, you guys. You know, like most people think life insurance is for when you die. Yes, of course it's for when you die. But the thing is how are you going to use it while you're alive? And that's where the power is. Long-term care, huge conversation right now, okay? People in our country, we know that about 75% of those over 65 will need long-term care at some point in their life, okay? And what that really means is that they've lost 2 out of their 6 ADLs, which is activities of daily living. And if you really think about it, when you wake up in the morning, you move from usually your bed to the bathroom, right? So you've moved yourself along. That's something that you might not be able to do one day. You might need someone to come help you get out of bed and get you to the toilet. Well, there you go, the toilet. What if you can't use the bathroom by yourself? What if you need somebody to help get you up on a commode or use other medical means to help you use the bathroom? Well, that could be something else. What about giving yourself a bath? Okay, that's something that we should all be able to do. What about cooking and feeding yourself, right? So there are so many different things that we all take for granted when we're quote unquote able-bodied people. But as soon as you lose those capabilities, you're going to have the financial resources for someone to come in and care for you. Now, college funds or 529 plans, definitely a strategy in and of itself, I should say, saving for an educational purpose. That's something that all families should really take advantage of, right? Not everybody is suited for college. You know, I could say that. Some people just need to be an entrepreneur and go build something for themselves, and that's perfectly fine. But the thing is, whether you're an entrepreneur, a capitalist, right, or you're a laborer, somebody that goes and works for somebody else, you need to build your skills, right? You need to have some kind of marketable capability. And you're going to likely need to go pay somebody to give you that skill or help you to develop something that's natural. Okay. What about tax advantage products? Again, if you don't have a financial professional or somebody that has been trained in a particular discipline to help you understand the system, then you're just going to remain ignorant, right? Again, we don't know what we don't know. And that's why so many of us are still left with that median income of $11,000 a year, because we just don't know how to raise ourselves out of that lifestyle, if that's what you so choose to do, right? Indexing accounts. Again, indexing accounts have been around for quite some time. They were put into place because the wealthy wanted to have a way where they could leverage risk in a way to where they didn't lose any money in their accounts, right? It just means you don't get 100% of the upside all the time. But guess what? None of my clients have lost any money in this market correction because many of them choose to use strategies that don't put their assets at risk. Okay. Now, what about 401k company plans? If you're a business owner and you want to offer an opportunity for your employees to put away money for retirement, that could be a great plan. If you are an employee, there are so many different financial strategies out there other than 401ks that I would always highly consider people look into because of the many different elements of that particular plan. And I can tell you, when the 401k tax code was designed, it was not designed to be a retirement account. It was identified as one because tax rates back in the 70s, and I will share with you guys down the line, the tax rates at that time were over 70%. And so the wealthy were trying to figure out a way to remove themselves legally from that taxable environment, and the 401k was born. Now, executive bonus plans have been around for quite some time as well. It's another way for business owners to receive a tax benefit from one side of the equation. And then for the beneficiary of this particular strategy, they may likely have a significantly tax advantaged retirement on the other side. And if you want to know more about that, you can do your research, or we can talk more about it later. But then registered investment advisory services are also something that you can look into, people that want to buy stocks and bonds, that type of thing. Okay. But the thing you really need to understand, how should you be leveraging your assets, right? So you go to work every day, whether that's in your own business or you get up to go work in somebody else's, and you receive this paycheck. You've paid off all your bills, you've put your savings to the side for your emergency fund, and now you have all of this, discretionary income. that you need to figure out how to leverage so that way you can eventually do the things you want to do, whether that's retirement, send kids to college, go on a vacation of a lifetime, retire early, whatever it may be, okay? Now, what this pyramid really shows is that on the foundation, all of us should consider having a home, having somewhere comfortable to lay our head at night, right? Somewhere to keep our assets. So many of us are renting from somebody. All of our assets belong in a location that somebody else owns and controls, right? What about your cash? How much of that do you keep on hand or in the bank, okay? You need to understand the banking industry. If you put your money in the bank, how guaranteed is it in the bank, right? Is it a debt to you or is it a debt to the bank, right? A lot of people don't understand even what money is. Now, what about insurance? Do you have enough insurance? What kind of insurance? Is it on you? Is it on your phone? Is it on your car? Is it on your children? What do you really care about? Because that's what insurance is for, okay? Now, if you're looking for more low risk versus medium or high risk, that's when you're going to be staying towards the lower part of this particular pyramid, because obviously the higher the risk, the higher the reward. And all that means is if you put your money or your cash into a particular strategy, if you're expecting it to grow at, let's say, 20%, well, then there's a high likelihood that you can also lose 20% or greater, right? But in something like a bank account, you're getting, like I said before, 0 point nothing. Well, that's because you can walk up to the bank at any given point in time and take all of your money out, right? You don't have enough time, or the bank isn't trusting that you'll give it enough time to vest and actually grow in any significant manner, okay? So what are the critical factors that you should be really thinking about? Well, what are your goals? We talked before about just creating a simple plan, sitting down and having a personal financial review with somebody that you trust that can help you ask kind of the hard questions. Where are you trying to go in life? What are you willing to risk, or what are you willing to give up to get to where you're trying to go? What about the time horizon, right? Usually your risk tolerance is going to be a little higher if you have a much longer time horizon. But for my clients that are trying to retire in the next 5 to 15 years, their time horizon is low and their risk tolerance is also very low. So generally they want more, conservative type strategies. What about the liquidity? Again, the bank, right? Your money is liquid. You can just walk right in, get the cash, walk out, versus putting your money into oil and gas or some commodities, right? Taxes. Obviously, taxes are going to be different from strategy to strategy. Definitely sit down with a tax professional, a licensed tax professional. No, not your Uncle Joe that sits on your grandma's couch in the corner and is telling you what they read on the latest news about taxes. That's not going to be sufficient enough. You need someone licensed, somebody that could be responsible for the information that they give you, and somebody that can show you the strategies that only they will know how to implement. Because of our licensing, nobody else will know how to do that for you, okay? Diversification is important as well, because you've probably heard about not putting all of your eggs in one basket. What is the result of that? I mean, back when Enron was trading, right? Remember, everybody had their money in Enron that was working there, and internally they were cooking the books, and the next thing you know, everybody that worked for that company that had most of their retirement lost it all. And it was kind of an interesting time for me, because that's when I was really getting my feet wet back when I was in college, and I'd actually bought about $100 of Enron stock when it was like 5 or 10 cents for each stock. And the funny thing, it was volatile at the time. You could literally get in at like 10 cents and then it would jump up to 20 cents. And then that's when I took my profit. So I doubled my money very quickly. I would not suggest you go do that, but I'm just saying that was my experience and just understanding kind of how stock works and having fun with it, right? And then inflation, again, that's going to just be the general overall increase of cost of goods here in our country and in other countries. You may have heard in the past where there was something called hyperinflation. You need to be very aware of what is going on politically and economically within our country, because we are not immune from any of that, okay? There's been times in the past where the government confiscated gold. There's been time in the past where banks shut down and you were very limited on how much you could get out, okay? There's a lot of things that you guys need to be aware of. So again, leveraging your assets is going to be one of the most important things that you do. And I'm just going to kind of let you know right now, we do have a national currency. Do you know what that is? I'll give you a hint. It's not the American dollar. All right, well, that's what we have for our segment today. I really appreciate you guys joining me again. Hopefully that was just enough for you to chew on and to really think about what you guys have in place for your family, what you have in place for your business, if some risks were to pop up and you just were not sure on how to protect yourself. We will come back and talk a little bit more about some of these strategies and hopefully give you a little bit more actionable plans on some of the things that you could be doing. Until then, have a great day, stay safe.